On this episode of The Naked Entrepreneur, Mike Katchen, the inventive founder and CEO of Wealthsimple.
How can we frame such an important life decision for people in such an archaic way that just is irrelevant for 90% or more?
What do you think the more relevant two questions should be?
And so there's a lot of people that get the industry and get the change that's coming, get the need for change. I'm 27, kid in this industry in particular. There is something happening in the Canadian tech scene right now where for the first time, I think we have a cohort of companies that are achieving really great success, home runs.
The Naked Entrepreneur starts now. Welcome to The Naked Entrepreneur. I'm Sean Wise, and I'm joined today by the founder of Wealthsimple, Mike Katchen. Mike, thanks for coming.
Thanks so much for having me. Great to be here.
Mike, let's start where we always start. What's the elevator pitch for Wealthsimple?
Yeah, Wealthsimple makes really smart, high-quality investing accessible to everybody. So when you think about investing traditionally, it's either out of touch because account balances with a traditional advisor are $150,000, $250,000 or more. The costs are out of whack. The average Canadian's paying 2.5%, not really getting that much for it. And transparency and the experience around investing is pretty complex. It's this overwhelming, opaque experience. We use technology to make the whole experience around investing simple and transparent, low cost by cutting out all of the back office administration and automating it with technology, and enabling people with a more modest asset set to get started. So our account minimums are just $5,000 rather than $500,000. So we're trying to make it really accessible to people to get started with investing.
So in business school, which I know we both went to, they talk a lot about creative destruction, how new technologies, new innovations make old ideas obsolete. Uber and the taxi companies, Netflix and Blockbuster, even Amazon and the traditional bookstore. So who do you think you're disrupting?
It's interesting. I actually view what we're doing more as a transformation than a disruption. That might be a not even worthwhile nuance. But in our model, we actually pair every client with a dedicated advisor. So there's still a complement of a more traditional way of doing it. We give you access to human advice. And I think that's a really nice model. So I actually see the technology that we've built as complementing the industry. And we're actively working with traditional advisors out there that don't have the technology capabilities in-house to provide a much more modern, low-cost, efficient experience to their clients, which is slightly different than the Uber model that comes in and replaces an industry. We'd actually like to support it, make it better, if that makes sense.
I think it does. Now, one of the things that we've noticed in some of these transformative or disruptive industries is it takes an exponentially better solution. Uber is exponentially more transparent about where your taxi is than the taxi companies. Mm-hmm. Netflix allows you to rent movies without wearing pants.
Yeah.
What's exponentially better about Wealthsimple compared to more traditional investment services? One, you said you can get in lower. So if you only have
three simple things, right?
$10,000.
That's right. Getting started early. So the average client with us, 80% of our clients are under 40, which is the inverse of the industry where 90% of clients are over 50. Right? So we're helping young people in particular get started with investing by having a really low account minimum. 2 is cost. So we charge 0.5% or less, which is remarkably low for the level of service that we offer. The average Canadian is paying 2.5% for advice and mutual funds and that sort of a thing. And 3 is transparency. So if you're an investor today, or even if you're not, you can probably imagine most investors will get a statement in the mail, paper statement, that you look at it and you should be able to know a couple things pretty quickly, but you won't have any idea how you've performed and how much you paid in fees.
Which you would think is
the only thing you really care about, let's be honest.
Okay.
So, when you sign into Wealthsimple, and you can do it on a mobile app, you can do it on the computer, you see 4 numbers. How much money did you put into the account? How much have you made? What have you paid in fees? And if you just add those 3 numbers up, simple arithmetic, you get what the total value is today. It could not be more intuitive and transparent. And it's funny because that does not seem like it should be a huge innovation.
Doesn't seem exponentially innovative.
But if you look at the state of the industry, it's transformative. In fact, the level of transparency around reporting is so bad that the government is actually implementing new laws over the next 18 months that forces advisors to be much more open about how much they're charging and what their clients are receiving in the way of performance.
And you're already on the other side of that potential.
Yeah, our hope is we're going to shape it. We think we want to push the boundary about what this is and make it even, take it further than kind of what's been proposed by the legislation.
Now, you said a fact a little earlier that I found very impactful, that the majority of your clients are in the younger group, the millennials, if you will, whereas 90% of the clients in the other industries are over 40. Why do you think you resonate more with these cool new kids in the 21st century?
I think there's lots of reasons. I mean, one is, and we built the service for ourselves, and we are squarely in that demographic. I think so. When it came to the design, the product experience, we were the first paperless investment manager in the country, which is also hard to believe. It doesn't really feel that innovative, but 6 months ago when we launched, or 8 months ago when we launched, we were the first paperless investment manager. We were the first to come out with these really simple, beautiful, easy to use apps. So we've created an experience that younger clients and younger people are just come to expect of any of the services that they use today. And our aspiration is to make signing up for an investment account just as easy as it is to sign up for Facebook.
Coming up on The Naked Entrepreneur.
How can we frame such an important life decision for people in such an archaic way that just is irrelevant for 90% or more?
What do you think the more relevant two questions should be?
There's a lot of people that get the industry and get the change that's coming, get the need for change.
All coming up on The Naked Entrepreneur. Mike Katchen admits he was the weird kid who was interested in investing at a young age. He won his first stock picking contest at age 12. He had an entrepreneurial spirit growing up, but decided to go into consulting upon graduating university. Mike later decided to quit to run the marketing arm of 1000 Memories, a Silicon Valley-based startup that was eventually acquired by Ancestry.com in 2012. Mike returned to Toronto in 2014 and made the decision to launch his new startup, Wealthsimple. Since the launch, Wealthsimple has grown exponentially and has raised more than $30 million of funding to continue that growth curve. If you wanted to compare and contrast 5 years hence the experiences that you want people to have from going into a investment portfolio company or a bank or Wealthsimple, how would you like Wealthsimple to be described?
Yeah, it's a great question. I mean, I would love it to, a few words to resonate, right? Simple. And I'd love for people to just say, wow, that made sense. And you know, a big part of what we do is we try to set people up for long-term financial success. So that means a whole set of behaviors around how much you're putting away and saving regularly and how you're putting it into a plan to achieve longer-term financial goals. So I'd love for people to walk away from that experience of signing up for an account and feel really good about the plan that they have ahead of them. And why I see this as an opportunity is if you were to sit down with an advisor today, any advisor, they'd ask you two questions. One, how old do you want to be when you retire? And two, how much after-tax monthly income do you want in retirement? If you're anything more than 5 years away from retirement, that's wholly irrelevant. Like how can we frame such an important life decision for people in such an archaic way that just is irrelevant for 90% or more?
What do you think the
folks?
more relevant two questions should be?
A, am I saving enough? How am I doing against people like me? I love this idea of
benchmarking.
Benchmarking. Am I on track to meet where I need to be for my goals long term? And if I don't know my goals, and a lot of young people don't, am I ahead or behind the curve? And just that little bit of information, I think, can incent us to start doing the right behaviors.
Now, speaking of on track, you sort of bucked the trends. You raised a seed round from really smart, strategic, high net worth individuals before you even had a minimum viable product, a demo, just an idea, which is sort of .com-ish, instead of having the product and the proof points, you went the other way.
Yeah.
And more recently, I read that you've raised a round that would give you up to $30 million. And the company is just over a year, isn't it?
Just over a year,
months?
working on it, but 8 months with a product in market, so yeah, not that old yet.
What do you think drove such a large subscription to your business model?
I mean, I'd separate those two events. I think they're quite different.
Okay.
When it comes to seed rounds, really you can do it a couple different ways. You can have a great team that's selling a dream in a really big market, and I think that's what we did. Or you can have a minimum viable product that needs to show some traction. And there's different questions you might get with it. And I think I was really fortunate when I went out to raise our seed round that I had just come off a successful exit from a Y Combinator company in the Valley and had moved back to Canada, managed to convince a couple of my close friends and colleagues from that company in the Valley called 1000 Memories to move up here. So we had this really sexy story around the team. And then the market. Canada in particular, we have the third largest stock market in Toronto in the world. We have one of the most developed financial services industries. And so there's a lot of people that get the industry and get the change that's coming, get the need for change. So when we presented this vision of what the industry could look like in the future, match that with the team that we were putting together, there's a lot of interest in being a part of the company.
You said a lot there that I really want to get into, and we'll get into that right after these commercial breaks. Coming up on The Naked Entrepreneur.
I'm 27, kid in this industry in particular. There is something happening in the Canadian tech scene right now where for the first time, I think we have a cohort of companies that are achieving really great success, home runs.
All coming up on The Naked Entrepreneur. Welcome back to The Naked Entrepreneur. I'm joined today by the founder of Wealthsimple, Mike Katchen. Mike, before the break, you were talking about doing a startup in the Valley, about Y Combinator, the great accelerator that's led to so much success. So I know 1,000 Memories, and I know that it was acquired by Ancestry. Why did you come back? I thought everyone had to go to Silicon Valley to build the next great dream. Why build it in Canada?
Yeah, so it's a great question. I think that's changing. I grew up in Toronto, so Canada's home, and I always had the intention of moving back here. And I had this really interesting experience that while I was down in the Valley, a whole bunch of my Canadian friends did the same thing. We're down there working in tech startups. Some had exits,
That's not
some
that
didn't.
uncommon, right? There's a lot of Canadians in the Valley. There's even a group called the C100 that focuses on
I've
Canadians
heard some
in the Valley.
crazy stat that it's like 500,000 Canadians live in California. If you think about that, that's a tremendous amount of people, right? So I had a ton of friends that moved down and kind of were a couple years ahead of me and doing tech stuff down there. And it was amazing that over 3 years, all of them moved back. And all of them moved back and were doing really interesting things here in Canada. So
why do you think they did that?
I think there's a few things.
There's too much sun, they missed the snow?
There is something happening in the Canadian tech scene right now where for the first time, I think we have a cohort of companies that are achieving really great success, home runs. You've got Shopify, you've got Hootsuite, you've got Wattpad, that are these great Canadian success stories that are very typical tech startups, and they're not in the Valley, they're here. And that's different than the past where we had, Nortel, one giant, RIM, BlackBerry, one giant. Here you've got a cohort. And I think, we've got one of the best talent pools in the world through Waterloo. And this combination of things is kind of coming to fruition now, and I think it's been many years in the making. And on top of that, kind of rambling a little bit, but on top of that, we also have a great funding environment, especially at the seed stage.
Absolutely.
Where you've got a ton of angel investors, several seed stage funds that are happy to bet on early stage entrepreneurs and early stage companies, taking them from dream and MVP or idea on paper to product in market.
And people take their minimum viable product, their MVP,
Yeah.
and now don't have to go to the States. Is there a competitive advantage to Canada?
Many.
Tell me about them.
Yeah, so there's lots. One is certainly the talent pool. While we compete with a lot of our greatest engineers look to move to the Valley or go to bigger, more successful companies like a Google or Facebook rather than betting on a startup, we have a big talent pool of great tech talent on our doorstep, and that would be one. Two is the government's actually pretty good in the way that they throw incentives at early stage companies. So you've got all sorts of tax credits, and this sounds like the boring stuff you don't really hear about with
No, but
startups.
it can be vital to a young company.
But if you think about it, you can raise, if you raised a $500,000 seed round, the runway that you get, and everything in the early days is about runway.
So runway,
right?
how long you have until you run out of money?
Until you run out of money, right? Until you need to raise more money, until you need to start breaking even, all of those sorts of questions. Cash is the lifeblood of an early stage company, right? Any company. So you can extend your runway. Programs like the Shred credits, where you actually get credits back for hiring engineers and doing cool development work. IRAP, which is another great grant program. So you can take $500,000. It'll take you a lot further here than it will in the Valley. And that's a really cool nuance that I don't think a lot of people appreciate, how you can extend your runway and give yourself more chances of finding product market fit or really building a product that people want.
Now, your product is something that people want. In the first 6 months, you onboarded over 1,000 people who gave you their future, their money now, so that they could have a future. What do you think led them to your doorstep?
Yeah, it's a good question. I think, we think about growth all the time, and the very practical answer is there are 3 channels that we've gotten clients from. Our story is a really nice one. It's a really great story about making high-quality investing accessible to people, and the press has been a huge part of our early growth. We've had a ton of coverage in Canada and beyond Canada about the story of the business that we're building, and we've been very deliberate about that press strategy. 2 is referrals, which is, as the founder, and in the earliest days, was like the most promising sign that we were onto something. More than 50% of our new clients are coming from referrals today, and it's our fastest growing channel.
So people enjoying themselves, getting the benefits they want, resonating with your products, feel so strongly that they're bringing their social network to
They're
you.
inviting their friends, their family, the people they care about that they want to see also achieve, long-term financial success. They'll invite them onto the platform, and we incent that. We create an incentive to do that. So that's been a really powerful channel for us. Third is events. A big part of our mission is trying to educate people about what smart investing looks like.
Okay.
And so we invest very heavily in kind of financial literacy and education. And we do these events all around the city. I've probably done 50 personally in the last 3 months, 50 different companies on the basics of smart investing. And the idea is, we're just trying to set people up for achieving their goals, their long-term success. And that's been a really great channel for us too. While we don't go in with an explicit pitch, obviously people are interested in learning more about what we do.
Some entrepreneurs express a desire or a necessity to fake it before you make it. When I'm investing my money in someone else's hands, I want to know what prior success that they have had. But when you're a young company, that's not always possible. I can't ask you for your 7-year returns on the decisions through your platform.
Yeah.
How do you overcome that challenge?
So we were very deliberate about this from day one. I'm 27, kid in this industry in particular, financial services. And nobody, I think, would trust just us with, their, in any meaningful way with their long-term savings if we hadn't built a team around us of really wonderful icons of the industry that command a lot of respect.
And these are not only the people you work with, but also your investors.
The investors.
The sort of halo effect of your investors.
Yeah, and we were deliberate about the team we wanted to put together. So, the head of our investment committee is Professor Eric Kersner.
Very
he
well
is
respected.
Canada's foremost academic when it comes to investing. He built the very first what's called an ETF, which is one of the biggest financial services innovations of the last 30 years in the world, back in 1989. Canada was actually the pioneer of ETFs globally. Very few people know that, and this is the guy that did it. So, if we can say, not only are we, this young tech team that's got this great vision of what the future can look like, but we've also brought in people that have, 40-year track records in the industry that are tremendously well respected. We thought that was a winning combination, and it's worked. It's worked really well.
Coming up on The Naked Entrepreneur.
You are nothing but your team, especially in an early stage startup. I like to think of myself as the least important person in the company. I'm not a technical guy by background. I wasn't an engineer. I wish I had been. We find ourselves in this really interesting and kind of scary spot.
All coming up on The Naked Entrepreneur. You joked to me that you are the accidental entrepreneur. That whereas some people have a lemonade stand and then they graduate to a paper route and then they create an empire, a network of paper route people, you sort of were the accidental entrepreneur. Every time you got a job and tried to quit, they kept pulling you right back in. Where does your entrepreneurial flavor come from? Where does this flair, this desire, this fervor, if you will, originate then?
Yeah, it's funny. So it's the accidental entrepreneur that always wanted to start a business, but always got cold feet at the last minute. I grew up with entrepreneurs. I mean, my grandfather was an entrepreneur. He built one of the largest meat packing plants back in Calgary. This is when Calgary was like a 20,000 person town. And my dad was an entrepreneur who built a couple restaurants and did all sorts of small little entrepreneurial crazy things.
So why did you keep getting
up.
Cold feet then?
It's a great question. I mean, I'm not sure. I think I was lucky that I think the opportunities that pulled me away from starting a business were really interesting ones, and I think I learned a lot by doing them. So I think I'm a better entrepreneur for having had those experiences. But I'm glad that I've kind of figured it out now and decided to jump in with both feet. I'm having more fun than I've ever had in my life.
Is that important to the culture of Wealthsimple?
Fun? Mm-hmm. Yeah.
Because when I think about banking and financial services, doesn't really matter to me whether you're having fun or not. I care about the return on my investment, how much you're holding of my money and what you're going to turn into it. But I could see why you'd be more passionate about something that you enjoy. What is the culture at Wealthsimple? Does fun play a role?
Yeah, for sure. I mean, if I've learned one thing in my career so far, and there's a few things, but if there was one thing I could pick, it's working with great people is like the only thing that really matters. I've had this experience, you're working on things you don't care about. When I was in consultant, I worked on railroads in Mexico, which was not particularly passionate, a source of passion for me, but I was working with the best people and had the most amazing time on that, that project, that experience. And that's been really important to us. So we take the team building part of what we're doing here super seriously. And not only the people we bring in the door, but how do we codify the values, the mission, the vision of the company? We find ourselves in this really interesting and kind of scary spot where we're 9 months old in market, 8 months old in market, right? And we've raised this massive round of capital. And you see companies that have all this early promise sometimes that end up screwing it up. And often what happens is you grow the team really fast and you get further and further away from the earliest team members that were super passionate about the mission, really clear on the values of the company. And as decision making disseminates and the team really grows, you lose your way. And so we've tried to be really thoughtful about how we make sure we don't do that. So we spent a lot of time over the last few months trying to codify the values of Wealthsimple, really invent the Wealthsimple way of doing things.
So how did you create the Wealthsimple manifesto, and how did you get everyone else to buy into that culture?
So, I mean, the answer is it is a product of all of us. It's not a me coming up with a manifesto in a black box and telling the team, this is our manifesto. Yesterday, we spent an hour as a team sitting down, going over the latest iteration. We've done this many times now. We had the latest iteration of what the vision, mission, and values of the company are, and we debated them as a team of 15 people. We sat in a room. People said what they liked, what they didn't like, what they thought, where we think we're living up to our values today, where we think we're failing. And I think this ongoing conversation that involves the whole company is the only way that we get this right and really make it part of our DNA as we grow the team.
Now, you mentioned that team is so important, and it's important to have great people. A lot of young founders struggle with the catch-22 of entrepreneurial hiring. I need to have lots of capital before I can afford to get people out of their well-paying jobs. But if I don't have those sort of people, I can't raise that level of capital. Yes, you raised a lot of money quickly, but before you did that, you had people already willing to jump on board. In fact, they were willing to uproot from sunny California to snowy Toronto.
Reversing brain drain over here.
Reverse the brain drain, absolutely. What do you tell people when they're struggling with that catch-22? How did you get past it?
I think, to me, this is like the single most important part. You are nothing but your team, especially in an early stage startup. They are the people that are going to execute. They are the people that you're going to depend on when things are really tough, and the people you're going to celebrate with when things are really great. But at the end of the day, you are nothing but your team. So, if there's one thing when you're really going to spend time and energy on getting right, it's got to be that.
The people.
The people. And, you want to work with the best. My philosophy on hiring is I like to think of myself as the least important person in the company. And if I'm looking to hire someone in marketing, I want that person to be so much better than me in marketing that I'm learning from them every day. And of course I shouldn't be, involved in marketing. I can be a helpful sounding board, but that's not supposed to be what I'm doing. And I feel that way today. I feel like we've been lucky as we've gone, and hired some amazing, talented people. I see my role getting more and more, focused, and I think that's a really great thing, and I think that's a really important thing.
Maybe the role of the CEO is to bring on the other people.
I think that's an important one. If you're there are different types of roles. If
sure.
you're a product visionary, a technical visionary, I'm not that. I'm not a technical guy by background. I wasn't an engineer. I wish I had been, but I learned product and some very simple skills when it comes to my technical abilities. So I need to surround myself with the people that have those skills and that vision. Otherwise, I won't be successful.
Coming up on The Naked Entrepreneur.
The data is so clear. It's counterintuitive because people love the idea of stock picking. Smart investing is not about picking stocks. That's gambling.
What is going to make or break you in the next 3, 6, or 9 months? All coming up on The Naked Entrepreneur. Some people like top-down hiring, where you go and steal your competitor's CFO, chief financial officer, and bring them on, so you get all these new ways of looking at things. Other people talk more about bottom-up hiring, where you promote from within to give a sense of camaraderie and you already know the person. Has one of them been more successful for you than the other?
To be honest, I think it's too early to tell. Our focus has just been on bringing the best people we can find onto the team and get them super excited to build something really special. And where they come from has not been a huge kind of which is best and is it from within or without, and that'll change. We're still so young. I'm not sure we faced that challenge yet. It's another challenge that I'm sure we'll come across some point.
Now that capital isn't your issue,
Yeah.
what do you think is the issue? What is going to make or break you in the next 3, 6, or 9 months?
So for sure, what we've just been talking about, team. If we cannot continue to build a team of really exceptional people, we're going to struggle. I think two is, we're in a fortunate position. We were actually not the first to launch this sort of model in Canada, but I think by far we're the market leader now. And we've had a lot of luck and done some things pretty well that got us to this space, but we're still small. And I think over the next 12, 18 months, we're going to see a lot of new companies try and get into this space. So we're at this great space where we're the market leader today, and we've got these 3 channels I told you that are working really well for us. We've got all this capital, and we're testing. We need 10 channels that are working for us.
You want to do data-driven decision-making.
You
want to
yeah.
test before you sink all your capital in.
Exactly. So we've got this runway where we're able to test and figure that stuff out, but we got to do it quickly. So we're pretty focused on making that happen.
Now, Brad Feld, who's a co-author of mine and a friend of mine and very well published himself, he talks about entrepreneurs not being passionate, but instead being obsessed, finding a domain that they would spend every minute learning more and more about. You're interested, obviously, in investments and turning asset management into a growing trend. Where did that interest come from? Can you remember an early time when you first played your first stock picking competition, or you used a video game that turned you on?
Yeah, it's very clear in my mind. I was 12 years old, and my dad entered a stock picking contest it was for charity. You got this $100,000 of play money that you got to invest in a portfolio, and he said, "Mike, you're gonna pick the stocks, and I'm gonna show you how to do it." And he sat me down and he opened the the newspaper to the stock section and said, "Pick a few. We'll do some research. I'll tell you how to think about which stocks make sense." And we did that together, and we ended up winning that competition.
Did he give you some of his winnings?
We won a free trip to Whistler for
not
2.
a bad little
So
prize.
it was great. We went for a week, and that was the start of it for me. I mean, I got really interested in stocks and investing. And
what made it interesting to you? Was it the parental connection that gave you and your dad something to work on together? Was it the sense of objective success? I start with $100. I either end with 500 or 0. What was it that drove a 12-year-old to get interested in the stat sheet as opposed to, say, the sports line or the betting line in the sports section?
So I think it's funny. I think it's evolved. My interest has evolved substantially over time. Early days, I think for sure there was the warm memory connection to this thing that happened with my dad. And then there was the gambling side. And for most people don't know that smart investing is not about picking stocks. That's gambling. There's so few people that do that consistently well. It's why we only have one Warren Buffett. If it was easy, we'd have a lot more people doing that well.
So if it's not about gambling, if it's not about just picking the right stocks, what is it about?
It's about being really thoughtful about building a diversified portfolio and sticking to a plan over time. It's often the emotion that comes into investing where people make the biggest mistakes. Where they have a really good long-term idea of where things are moving or what a good portfolio would look like long-term, but a market like 2008 or 2001 comes along and they forget or they get emotional. They see their portfolios down 30% and they decide, I'm going to panic. I don't want to have anything to do with this anymore. And that's the thing that kills investors long-term.
Interesting.
So my interest was the gambling part early on. I loved the idea of making quick bucks, returns, but that was back in 2000. So you can imagine that I was very quick to learn how quickly everything can turn, as the market crashed in 2001 with the tech bubble bursting. And so, my perspective has evolved a lot to love just the basics and the simple stuff around building a smart portfolio, diversification, tax optimization.
Do you think Wealthsimple is ever going to get into inspiring the next generation and have its own stock picking competition?
No, we may enable people to do a little bit of stock picking to customize their portfolios on the side, but the majority of your portfolio should never be doing that. I mean, the data is so clear. it's counterintuitive because people love the idea of stock picking. They think that,
Yeah, but it's counterintuitive too that the casino always wins. Yet
Yeah.
you know that as a fact.
But the
walking into
casino's always
casino.
full. I mean, people
Yeah.
go in and they're betting, and you know these things.
Absolutely.
But people enjoy it. So we've thought about making stock picking accessible to people, but in a very disciplined way. So you allocate like a very small piece of your portfolio to this sort of stock picking sort of opportunity, but you keep the majority in a much more boring, disciplined plan, which is the core of what we're trying to do, because we're trying to set our clients up for long-term success, and if we're picking stocks, we're not going to be able to live up to that.
Coming up on The Naked Entrepreneur.
When you're the CEO of a company, people expect you to have the answers. This guy's like, we're going to go to Mars, and bets his fortune on doing it, bets himself on it, and then not only that, but he teaches himself to be a rocket scientist.
All coming up on The Naked Entrepreneur. Welcome back to The Naked Entrepreneur. Joining me today, Mike Katchen from Wealthsimple. Mike, we've gotten to the portion of the show which is our rapid fire questions. I'm going to read you a bunch of questions. Give me the first thing that comes to your mind, and hopefully it won't be too troubling. You ready?
Sure.
Here we go. Can entrepreneurship be taught, or are you born an entrepreneur?
Both.
How so?
So I think I'm the perfect example of the guy that wanted to be an entrepreneur, but I think very possibly could have never done it. I think I had some people in my life that taught me how to have the confidence and how to think about things in a way that, makes it much more accessible to start a business.
What's the worst advice you've ever received?
I needed all this experience to go be an entrepreneur. That when I wanted to start a company, I was a naive kid, and I should go work for 5-10 years and really learn an industry and develop a really core set of skills before doing it.
Told to you by the person who didn't want you to leave his company.
The person that was trying to recruit me for his company. It's funny. Okay. He's now one of my closest mentors and a good friend. But if you listen to all the advice you get, sometimes you never go where you want to be. And I only took his advice for 2 years, and I learned a lot, and that was a great experience. But I'm glad I didn't stay for another 8.
Okay. Well, what was the best advice you've ever received?
To quit Ancestry. And start Wealthsimple.
Ancestry bought 1,000
so
memories.
Ancestry bought 1,000 memories, and I actually quit a year later to come back to Canada to start Wealthsimple. They convinced me not to quit and to take over as the head of the Canadian business. And 2 weeks into it, I was in a really rough spot. I knew that I'd made a big mistake, but I felt really raw about it because I just committed to taking on this new role. I didn't want to kind of leave them high and dry. And a very close friend of mine just said, "What the hell are you doing? You only get one life, and if you're doing things where you're not learning and you're not getting, not really pursuing what you're passionate about, what's the point? Go do this." And thank God he did. Yeah.
For all of us. Which entrepreneurs do you admire most?
Elon Musk.
Why Elon?
Yeah, I think he's probably the answer for a lot of people. He's been my hero for a long time.
It's a great story.
Who
the founder of Tesla and SpaceX and all
PayPal.
Sorts of different things.
This guy has no fear about tackling big problems. A lot of entrepreneurs out there and are building great businesses and great products. The software in particular is an easy product to build. This guy's like, we're going to go to Mars. And bets his fortune on doing it.
We're going to create a battery for the home. We're going to change the way people drive to work.
He bets himself on it, and then not only that, but he teaches himself to be a rocket scientist and figures it out. He's now one of the foremost rocket scientists in the world, and they're literally getting there. Yeah. I love that vision. I love that ambition of someone that isn't afraid to tackle such a real, massive problem, and do it not naively. Certainly people would call him naive and crazy for thinking about these things, but he's
Maybe
less
so now.
But he's a really smart guy that has a really thoughtful plan about how to do it. And I think we need more people that are as audacious as he is.
Okay. What's the worst part about being an entrepreneur?
It's tough. It's kind of, there's the great part about it and the toughest part about it. The great part is it's a real challenge, and if you like problem solving and working through challenges, it's a really rewarding sort of thing to do. At the same time, it's really tough because you never have the answers. And for very personally, I have no idea what I'm doing 90% of the time, and you got to fake it, right? You got to fake it a lot of the time. You're talking with investors, you're talking with the press that's telling you, with your team. And so that's a really tough part about this, is you got to figure it out while you go. And the only way I think to do that successfully is to surround yourself with people that have a better clue of what the answer is than you might yourself.
So if you have to sometimes fake it, that seems to me to be in conflict with the idea of being genuine to yourself. And when I speak to you, I feel you're very genuine with what you're doing, with why you're doing it. So how do you reconcile this fake it with the genuineness, the integrity?
I think, so I don't want to give the impression of faking means lying. I wouldn't equate those things. I think it's really important to always be genuine and truthful. And my approach in particular when it comes to planning is to ask questions rather than to assert what the answer is.
Okay.
But sometimes when you're the CEO of a company, people expect you to have the answers. And sometimes, if you're going out to raise capital, and you're in an investor meeting and someone says, what are you doing about this? You can't say, well, sometimes you can't just ask the questions and kind of figure it out. Sometimes you need the answer. And
they look to you to have the answer.
Yeah, and so you are genuine, you're thoughtful, and you're honest about, we're not sure yet, but here are the things we're testing. Might be the way I'd phrase something, but you have to have the confidence in your convictions, and sometimes you don't know those answers when you're saying what the plan might look like.
What's your biggest fear? What keeps you up at night?
Failing. We are at a stage now when I think we are doing something so unbelievably important for investors and our clients today, and I worry a lot about what happens if we mess up. We mess up for them, who have put so much trust in us. We mess up for our team, who I feel so dependent on and so fortunate to be working with, and our investors who have put so much faith in us. A big part of once you do this sort of thing and you have kind of other competing, not competing, just stakeholders that are invested in what you're doing, you don't want to let them down. That's a really big thing that weighs on my mind.
I find that some entrepreneurs see investment as a success point, whereas as a professional investor, I see it as fuel for the future success. How did you feel after closing a round up to $30 million?
We did a quick high five because I think you have to. It's a really big milestone.
It is.
And you have to celebrate milestones. But yeah, no, this is the start. I mean, we are nowhere near where we need to be and want to be. And I think a round of this size is a really cool opportunity and a big challenge because it creates a whole set of opportunities we never could have considered before on this timeline. To really be faced with this, and we're pretty excited to explore what that could be. Yeah, it's exciting.
What's the one book you think most entrepreneurs should read?
So I'd say two,
Okay.
maybe.
That's fine.
So I think you need a book in your space or your industry that gets you inspired.
Sort of a
and
domain
excited.
knowledge.
Kind of like someone that came before you that you can learn from, read from. Mine is Unconventional Success by David Swenson,
Okay.
who's managed the Yale Endowment Fund forever and is one of the most incredible investors of all time, who wrote a book about what the average investor should be wary of and should be thoughtful about when they do this. And that was huge inspiration for me in the way we think about things at Wealthsimple. And then two is like a very practical book. I just saw it on the shelf, which is why I love it, is Traction.
Yeah, it's on the shelf there.
Growth, Paul Graham of Y Combinator says startups equal growth. Mm-hmm. And it's so true. Growth solves almost all problems in a startup. So you got to know how you're going to grow. And I think Gabriel Weinberg, who's one of the authors of this book, does a great job of defining several different, he calls them the traction verticals. Mm-hmm. And you got to know how to test, how to figure out which traction verticals are going to work for you. And I think that really framed things for me in a way that has really helped us get to where we are today. A
traction vertical being?
For instance, press. I told you a little bit earlier, press has been really important for us. Referrals, how you think about those different channels thoughtfully, how you build a plan to execute in each of those
Traction vertical
channels.
is like a blueprint for growth.
Yeah, exactly.
Yeah. Let's get in our time machine and let's take our TARDIS back 5-10 years. What's the advice you'd give yourself?
Learn as much as you possibly can and learn to code.
Learn to code and learn as much as you can.
Yeah,
okay?
yeah.
Now let's take that same time machine forward, and what would you like your legacy to be 40, 50, 60 years from now?
So, if we will have made investing totally aligned with investors and the clients and, created this really wonderful solution that's accessible and the price points make sense, and we're really helping people achieve their long-term success as we've set out as our mission. We want to enable people to achieve their goals. That will have been a huge success for us. I mean, that is the only thing we care about. That is the thing that will define whether or not we're a business that should exist and is actually transforming the industry or not.
Okay.
And then there's a very personal one around the team. I feel really in debt to our team. And if our team will have had a really great experience, loved working together, had a good outcome, I will feel really good about the legacy. If the legacy of Wealthsimple and my life is the team and whatever they go out to do after Wealthsimple or while we're still at Wealthsimple, that would make me really proud.
If the Wealthsimple team has the right outcomes.
Yeah, and personal outcomes. If they go out like the PayPal mafia, like if they go out and do things that at Wealthsimple, beyond Wealthsimple, can inspire others, and I think are really just good for society and good business and all that stuff. If I can look out and see that, I'll be really, really proud.
Thanks, Mike. I very much appreciate you sharing the naked truth on Wealthsimple. To learn more about Wealthsimple, please go to www.wealthsimple.com. To watch past episodes of our show, The Naked Entrepreneur, or to learn more about our guests, you can go to www.nakedentrepreneur.tv. I'm Dr. Sean Wise. Good day and good venturing.